Een herzlichen guten Morgen. Welkom bij een neues video. Today, as discussed, we're going to have some conversation about where we are in the cycle of crypto. And it's a question that's coming around quite often, and the question is based on the fact that people have experienced a bear market in the past 3 years, and based on that they assume that everything on the altcoins and Bitcoin will go down again. So we are on the crossroad of people who are becoming bullish and people who remain bearish and will be left behind. So that's why I wanted to make this video in which we are going to discuss that through a PowerPoint slides and some information and some signals you should use if you want to become a trader or investor. And after that we're going to conclude with some charts in which we can see the signals. So often asked, are we in a bull or bear market? In my view, the last shakeout on March 12th, the day that I moved to my parents to take care of them, Black Thursday also called, should be the shakeout of and the last shakeout of this market. It was a heavy crash, gold crashed, silver crashed, and all these assets jumped up, made new highs, or got back to their highs. If you think about that, you want to see the price sustain at a higher level, and you don't want to give people another opportunity at these price levels to get into the market. So if we get to these levels, we are in deep shit. And I also see people who are making the Elliott waves with targets of 1.6k. I'm like, yeah, but the market doesn't care about your Elliott waves or about these targets. Realistic view should be helpful in trading and just levels. We are at 9.6k right now. Through that, Bitcoin has seen the first rally back up towards the halving, which touched 10.4k, and we have discussed in the previous videos that altcoins are still looking to pace up. That's only going to happen when Bitcoin remains relatively calm, in which it goes sideways, makes a slight drop, and then just grinds up. And as we can see, the volatility is slowly draining away, which means that altcoins are jumping with more than 10% on a day on Binance and other cryptocurrency exchanges. One of them is Theta, has seen a tremendous move today. All the coins are Silica, Nano. They are all breaking significant moving averages on the daily, which means that the trend is going to shift towards upwards momentum. We also know that when the bear market is over for altcoins, and the bear market should be over in general, the bull market will be longer than the previous one. And I'm not expecting the current cycle of Bitcoin to be the same one as the last one, as if it's going to be the same, we should have a peak at 2021. While when markets mature, a market usually tends to take longer to get towards the next peak bubble. So for that fact, I assume that the next bull market will occur until like 2025, 2026. As we've seen with the previous cycles, that the first cycle was 2012, 2014, second cycle 2014, 2017. Third cycle should then most likely be 2017 to 2025. So alongside with the fact that Bitcoin has been grinding up substantially, has seen a halving, altcoins are starting to pace up, the sentiment is switching, the momentum is switching, which means that projects are finally releasing their updates and upgrades, while they have been waiting for the sentiment to switch to release these. So you would see some more improvements on that as well on the markets. So all in all, I guess that's really good for the market. Then we've got the TA perspective, in which we know that volume precedes price. Accumulation is going on everywhere. We will see it later on in the charts. The volume is high on the exchanges, and you can see that if you go towards the equity markets and when there was volume on them, that's the accumulation period. You don't really see the high significance on Bitcoin, as Bitcoin has seen some cycles already, but you can see it on the alt USDT pairs like Ethereum. High volume while the price is still accumulating in a range, while it's flipping the 100 and 200 MA on the daily as support right now, which is a crucial factor as all these MAs on the daily have been providing support throughout the past cycle. So it's a significant indicator to watch, and as long as the price remains above these MAs on the daily, it's buy the dip season. Also, we know Bitcoin is the first mover. The peak was in December 2017. Altcoins are usually lagging behind, and that's why they are ready to pace up right now to the levels of February 2020. Some coins have already done that, but Bitcoin has to remain calm, lower volatility, and then altcoins can start following, in which Ethereum is the main one. The bubble structure. Everything goes in bubbles, whether it is Bitcoin or the equity markets. As you can see, we've got some interesting facts from people who are buying crypto in the past weeks. We will discuss that in a little bit. We also know that the majority of people are currently buying stocks, as the waiting list for the brokers is heavily. But everything goes in bubbles. Remember this picture. At some point, the price starts to take off for certain assets, and then all of a sudden the hype or the peak or the panic starts to increase. The same goes for the fear of the coronavirus. Beginning of March, the first movements up started to occur, and then at some point when the whole public realized that the coronavirus will also hit them or their country, the mania phase occurred, after which peak high is reached at some point, and now we are getting towards a period where people are starting to go back to work, are a little bit too loose, but we're returning to the mean to which standard we can live right now, and the panic has been relatively going away until the second wave comes. The same goes around for the halving. A few weeks before the first hype started, and then just a week before the halving, the actual peak high is reached for the halving. Bull trap occurs, another push, and then back towards the mean, in which currently the halving hype is over and people just continue to live on. So in every asset, in every aspect of life, you can see actually this bubble in which everything is built up until a peak high, and then everything goes back to the mean, which right now is also the case on the equity markets. What I just discussed is that smart money and institutional investors are the ones you want to listen to if you want to invest in crypto and Bitcoin. And Paul Tudor Jones says he's loading up on Bitcoin as one of the few. That's an interesting signal that we are still early in the cycle of Bitcoin. We are not somewhere in between the new paradigm of or any delusion or greed from public. The public will join when everything is already moving. So you want to see messages like this of Paul Tudor Jones, in which he says that he's loading up on Bitcoin, as that's the big group that's going to move the markets. You and I are not going to move the markets. They are. Their buy pressure will move the markets. And if these are loading up, an increasing number of volume on the markets while the price is still remaining relatively stable is accumulation. So I expect more of these messages to come in the near future, in which big guys, smart money, institutional investors will be loading up on Bitcoin. But the same concept applies on gold and silver. You see more and more of these people shouting that they are loading up on gold and silver as well as a hedge towards the system. The other way around, this is a Dutch article in which you can see that there's a waiting line of 30,000 people for the stock markets, the equity markets, which is this phase, which is comparable to January 2018 on the crypto markets. The public will join when it's too late. When everybody wants to buy the dip on a certain asset, it's the moment you actually want to get out of it. And some more big investors and smart money has been saying that they are big on cash and they don't expect any bullish continuation on the equity markets given what is happening with the coronavirus. So the signal that people are actually loading up on stocks right now is the bull trap return to normal phase, the mania phase in which public still wants to be greedy and just speculate on the assets, while smart money are leaving the markets and are going towards the stealth phase on crypto. So reading those messages on social media or on just any news site are incredibly important to know how the sentiment is in the markets and what you should learn from that. So as a conclusion of this small presentation is that everything goes in bubbles. So when you are in an Uber and they say that they are buying stocks, you should get out. Other thing is that everything goes in bubbles. So the bubble of 2000, its dot-com bubble, is just a tiny bubble compared to this one. In the same phase, Bitcoin's bubble of 2014 is tiny to the 2017 one. And the 2017 one will be a tiny one compared to the 2025 one. So if you have an asset that you believe in and that you believe that the fundamentals are right, when nobody discusses the asset, you want to accumulate the position in that asset. Do I have to go all in and sell house? No. If you are an investor, you are still accumulating and using the DCA strategy in which you use the higher time frames to decrease your sizing. What I mean by that is that if you have 10k to allocate in a sustainable portfolio, from that a certain portion should be into Bitcoin. I would never allocate everything to Bitcoin, as that's just exposure and risk exposure you don't want to have on a long-term vision. Bitcoin can still go to zero because of a few variables we don't have in hand. So if you have a portion that you want to use for Bitcoin, you just buy every dip or just buy every month. That's also a great strategy. And based on that, if Bitcoin makes a moon period towards 20-25k, you can just decrease your exposure, use the profits to buy some more of gold and silver and allocate a proper portfolio balance in which if the prices crashes, you can buy back some more and increase your BTC value. So never go like all in on an asset, never buy everything in one go, just slowly accumulate. That's the calm and healthy way of investing in a certain asset. Buy the dip, as long as we stay above the 100 and 200 MA on the daily, it's buy the dip season. If you're a trader, then it's something different, as you just have a trade setup and you have got targets and a stop loss, in which you don't really care which way the market goes. Preferably you want to see it go up, as trading upwards is just way easier than trading downwards, and there's a higher percentage you can make. But a trader and investor should not be the same, and you should not be comparing these two, as these two are two different strategies. So then we can go towards the charts, in which we discuss a little bit of the volume precedes price. As you can see, this is the chart of Binance BTC USDT, in which you can see that the volume is structurally higher than it was before. That's a strong signal of accumulation and interest in this asset, but you can even see it more on Ethereum USDT. You can see an increase in volume while it was not over here. You can still see that the volume increased compared to earlier phases, but not much data is here around. Could also be futures that are increasing the volume, but overall this increase in volume is accumulation, especially when the price is just slowly crawling up. If the price starts to move heavily or gets into a higher point, you will see a lower volume than during accumulation, based on if you get to historical data, you can see that the actual volume on Apple occurred in the beginning. There's no volume right now on Apple, as people are holding this, trading less assets, also because of price increase. But the real volume will occur on Apple when it starts to crash heavily, as you can see a slight bump on the volume indicator here. So volume precedes price. If you see an increase in volume while the price is remaining stable, people are loading up. Similarly to Amazon, you can see that the volume was actually the highest during the dot-com bubble. You can't even see the whole dot-com bubble over here, but it retraced 95%. Well, right now the volume is just draining down as the price is going up. So if you want to load up as an investor, you want to see where the accumulation period is for certain assets. And for altcoins, especially Ethereum and the other majors, the price is between $100 and $300 is still accumulation. It's the period that you will be surprised of the movements of these altcoins. And Ethereum is one of them. They will be the leader. XRP is also showing an increase in volume. I don't know if other altcoins are doing it. Yes, Ontology is also showing increase in volume, which are all just showing strong accumulation. What you want to see is that in the case of Ethereum USD, I will just use that as an example. On Bitfinex, you can also see an increase in volume while there was no volume in the downwards movement over here. Is that we hold the 100 and 200 MA on the daily as support. We are not suspecting a move to occur as this one, as this is just a previous cycle, but you can see that during the whole period over here we held that these EMAs as support. Similarly, we can see it over here. As long as we remain above the 100 and 200 day MA, we are going to see an upwards continuation. This is even more bullish. Total market cap, increase in volume. People are loading up on crypto. We are back above the 100 and 200 MA on the daily. We've been since 2015 until we got into the bear market, and the asset increased by 24,000%. So as long as we remain above these MAs, everything is fine. So thank you for watching for this video. Tonight I'll be back with another market review. Don't become too bearish unless we lose these MAs, and have fun trading crypto. If you like this video, please do thumbs up, reply, subscribe, and see you tonight.